All right, everyone, welcome back for another episode of Carnivore Trades. Doing a special video today on 0DTE gamma exposure and how we use that in combination with the charts in order to make money in the live day trading room. So that's something that we have streamed pretty much all day long in Active Trader at the live day trading room in our private Discord. And it is basically a cheat code, is what I would call it, as it really adds validity to levels that you're looking at in certain setups. You can also use it for swing trading too, to find GEX walls and stuff like that. In fact, we actually just used that recently on a swing trade on a stock that was going into earnings. And it was actually Lululemon. We were looking for the GEX levels, and it did go right to exactly where we were expecting to at the 350 wall post earnings. But enough about that. Let's get into what we're doing here. So I'll explain to you how to read the gamma exposure, and then we'll kind of go over some of these charts here. So let's flip over, and this is just a stock kind of a picture here. But this is from, you're going to see May 20th at 1:34 p.m. And I was just kind of commenting on here, there's heavy GEX. And I was referring to 5,300 at the time. So we'll explain how to read this first. So you can see on the left, you obviously have your strikes there. And obviously this is S&P 500, the cash index, not the futures. Although you could do it on the futures too. You could do it on SPY as well, QQQ, whatever you like. In my experience, this is what the big boys use. This is what they move the market with, and everything kind of follows this. Although some days there are, I would say eight or maybe a 1 or a 2 out of 10, probably even less than that, where the GEX will follow SPY a little bit more and or QQQ. The numbers or the strikes on SPY are slightly different, it's like a couple point difference between, for instance, 5,300 on SPX was about 529 SPY right now. So there's a little bit of a difference. Sometimes I notice during OPEX, like the actual day OPEX, sometimes it'll go off of SPY more, sometimes it'll go off of the SPX more. Some days it'll go off of QQQ, but it's almost always off SPX. So that's kind of what we're using here. That's one of our main day trading tools. We trade the ES and the NQ a lot, and you can use the NQ as a proxy on the spiders, as I'm sure you guys are aware, and the same thing with the Dow and the Russell. But in any case, you can see the strikes here on the left, and obviously there's a bunch of just bars here. Don't worry about the numbers here. Pretty much just visualize. It's not like very often that you're going to need to actually count up the numbers. In fact, I'll show you in a minute. We can do that too. But either way, in this instance, it's very clear, like this is a important strike, right? So this here, the red is representative of put gamma exposure, and obviously the green is the call. So this is giving you the amount on either side. Now, I don't want to go in and explain exactly how market making works and gamma squeezing and all that extra stuff here, because it would be like an hour-long video. And it's just way too much. You don't even need to know that. I'm not a vol quant. I am not an options quant. So I don't even, don't claim to be an expert here. You can understand this stuff without knowing, without being a calculus quant. So the point is, 5,300 right here. These strikes, all of them actually, but the biggest ones act as magnets intraday. So generally, without getting too into it, putting it really simply, really oversimplification, the most amount of premiums generally going to get burned out at the largest area. Right now, if there's a large amount of, say, put gamma, then it's in the market maker's interest for us to close above that, by maybe a penny or two, maybe a point. Conversely, GEX on the call side would be lower. So right now, if this is intraday here, we're looking at 1:34 p.m. We've got GEX at 53.25, 20. So right in that area, there's a significant amount. Then a little bit at 10, a little bit at 15, but obviously this is your big fat magnet. And then a little bit below at 52.90. So where do you think price is going to want to go, right? It's probably going to want to go to this. Why? Because, and at the time we were trading above 5,300. And I'll show you the chart in a minute. But if you close at, say, 53.01 or 52.99, or just generally anywhere in this area. Now, of course, this changed by the end of the day, a little bit. These strikes moved around, but this is the big one. If you close right down here, you burn out all this call gamma, and you burn out this one, and you pay out the puts a penny, right? If we close at 52.99. So that's sort of the incentive there. If we were going down here and we somehow got below, and say we close below 52.90 to burn out these calls, that would be all well and good, but then those puts would get paid out by to the tune of the 10 points there. So again, the incentive here is to keep it away from the large strike, or excuse me, keep it just above or just below the large strike. Now, it doesn't always happen, right? If there's enough conviction, these levels will get blown out. I've seen it happen many times, right? Market makers generally just want to be delta neutral, meaning they'll just hedge if levels get broken. But usually in a market that's not, it's not like FOMC day, it's not a trend day, it's not just a regular normal run-of-the-mill day, they're going to kind of stay pinned between, in this case, probably you're looking at 53.25 to 5,300. That's probably your range for the day. And again, this will change throughout the day. This is just one snapshot from 1:30 in the afternoon. We could get news, Iran just bombed, whatever, and then all these strikes come up and so on and so forth. The futures market can run over the ODT desks. I've seen that happen many times, but generally in a run-of-the-mill environment, that's going to be kind of how this will play out here. Now, there's other things too, like I said, that come into play. I don't want to get too much into it, but just so that it's said right now, if we're in positive gamma and delta, this is a totally different day, by the way. We're at positive gamma and delta. These numbers will turn red on our program if we're in a negative configuration. And there's also things like deep in the money delta. This moves markets more than people think. And delta exposure is also a good tool here. I don't want to overcomplicate it, but just so you know, those are a few things that can factor in. But big deal here, if we can use, even this is from today, I'm doing this on June 13th. We can use this right here, right? 54.30 and then 35. And where did we close today? Well, they paid out, a couple points on the 35, but, we closed below that, we closed below 35 and above 30. So they pinned us right in that range. But again, going back here to our original example, so remember 1:30 p.m. and let's go to 5:20. So 5,300, you can see that was a point of control really throughout this whole stretch here for about 7-8 days. Now here you go, 5:20, Monday, 1:30 p.m. Right around here, we started to sell a little bit. So 120, there's 130. Again, like I said, we were above 5,300 at that time. And where did we sell from? 53.25. Right, so that call GEX, right, the market makers had the incentive to keep us off of that area. And then where did they step in? Just above 5,300. Now, volume on this day was really light on the SPY. If there was a little bit heavier, like we had just come off of a big trend move. So we were kind of just digesting and volume was light. But if volume was heavier, a lot of the time what would happen is we'd look for a pierce of that level. So a slight pierce. And it also kind of coincides with this little stopping point before we broke out. This would be a level we would look to scalp. That's why I put it out there in the trading room and made note of it. But you can see we got close and market makers kept us off of it by the end of the day. So closing us at 53.07, essentially burned out all of this. So we burned out the 5,300 put, paid out a little bit of the call, but we burned out all this call GEX above that. And there wasn't that much put GEX. So again, they probably got paid out to the max, the market makers, that is. So how can you use that? I mean, there's chart patterns we can put in. In this case, again, I just kind of picked it from a random day here, but you can see selling off in a straight line into 5,300. We know it's a point of control. It was likely going to be an area that we could scalp for a long. So if there was other things involved, like a, wedge pattern, something of that nature, I'm sure there's a fib here. I mean, yeah, we hit a 50% fib. Again, in a higher volume day, we would have likely hit the 618, and that would have been, I would have been all over that for a scalp. Probably would have marked the low of the day. In fact, clearly it did, it was going to anyway. But that's essentially the idea behind it. I talked a little bit about this on Apple yesterday. There was a lot of kind of posts about this, like, oh, like this is institutions selling it into Apple because they're distributing shares and whatnot. But we knew that was not the case because we pointed this out in the trading room. Where did it stop here? This is 220 GEX for OPEX, which is next Friday. And where did price go to on Apple? High of the day, 220 and 20 cents. And did they ever knock that down off of that? So again, you can see how that kind of pinpoints max moves and helps you to kind of just reinforcing support and resistance. There was a pattern a little bit earlier today. It actually played out. We actually had members scalping it. It was a little bit of a tough trade, but took a little while. But again, here's a rising wedge on the ES, and it broke bull intraday and then started to break bear. But from peak to trough, you're looking at 54, 43, 50 to 35. So there's a 10-point decline. And actually, if you held it, it was actually about 12 points. Again, not saying that this is the best example. I'm just trying to give you guys an idea here. And the reason I'm bringing that up is because at the time, there was a ton of call GEX at where? 54.30 on SPX, right? Where's SPX? 54.30. As soon as we got above that, they walked it back in, right? So combining those things, combining patterns, combining the GEX, it's a very powerful tool, and it's something I use every single day in the live day trading room. And sometimes, like I said, even for swing trades. Again, just to recap really quickly, again, the incentive is, generally speaking, it doesn't always have to happen, but the incentive is, if we can zoom in here, the incentive is to close and burn out the most premium as possible. So again, in this case, it closed a little bit above 54.30, so they paid out a few pennies, but they did get the put GEX. But in general, the most amount of premium is going to get closed below by a few cents. So if you hear me in the daily video, as I say it almost all the time, like, oh, it's likely we're going to close a penny below 54.20 or 54 this. And a lot of the time it happens. That's what I'm referring to. There's probably a lot of, call gamma at this strike, and I'm just assuming, all right, we might close a little bit below that. These things kind of mess around the last 5-10 minutes. These degenerates like go crazy with last second bets. It's actually pretty insane to watch it happen intraday. But again, puts, just think of it, you want it above, calls, you want it below. It's a very cool tool. It's very awesome. Helps out a ton. I also love looking at it on an intraday basis. When you get news, like let's say, Michigan consumer sentiment, when we get intraday, FOMC, stuff like that, you can see those strikes pop up, and they'll start to you can see essentially what they're targeting before everybody else does. It's a very cool tool. Again, another FOMC level, just to show you guys. I tweeted this yesterday because it was amusing to me. This is at 9:40 in the morning. Okay. So at 9:40 in the morning yesterday, we were essentially right here. Yeah, 54.25. So another 25-point rally in addition to yesterday's close. So 53.76 to essentially 54.50. Now, what happened yesterday? Did we get to 54.50? Look at all that gamma. You think they want to pay that out? Nope, they knocked it down once, and then we tried to go up for it again in the afternoon, and they really came in and made sure that was coming down. And by the way, did that not happen at the exact same time that Apple hit 220? And Apple was the leader yesterday. So again, cool stuff here. Let me know what you guys think. Do you use GEX? Do you hate GEX? Am I just making this up? In any case, hope you guys have a great rest of your day. Come find me on carnivoretrades.com. You take care, and I'll see you guys all later.